What is going on, YouTube? Welcome back to the channel. I'm glad you guys came across this video because this video right here is going to save you a ton of money in your lifetime if you take the time to learn about how you can save money with taxes. Something that we do not learn much about. It's something that they don't really teach us much in school unless you really actively go out and learn. It's not something that comes natural to people. It's not something that's it's boring, right? Taxes are boring. But just like investing and earning money, being able to keep the money you make is just as important, guys. So I want to take this time to break down tax loss harvesting or cryptocurrency specifically because this is something I'm super passionate about. I got into crypto this year. I'm going to be implementing tax loss harvesting for my own personal life. Now, I want to make a quick disclaimer. I am not an accountant. I'm not a financial advisor. Do your own research. Hire an accountant, hire a financial advisor, have an accountant walk you through the steps for your personal journey. Now, with that being said, that doesn't mean that you should not be going out and learning strategies on your own. You need to be doing your own research. Success isn't just going to come knocking on your door. You have to put in the work. Learning about wealth is going to better your life. Let's get into the nitty gritty of tax loss harvesting because I think it's pretty cool, honestly. Now, what is it? What even is it? Tax loss harvesting is the selling of crypto at a loss to offset capital gains for that year. So selling off an asset for a loss at the end of a fiscal year locks in that loss. Once the new year then begins, buying back that asset, you would still own it for relatively the same price, but you would save off taxes from the previous year. So say you had two investments. One, you made money. The other, you were you made money, sold it, right? So you took profits. The other, you're down money, but you didn't sell yet. Now, come the end of the year, towards end of December, right? You then sell that one for a loss. You sell that second investment for a loss. You lock in that profit. It offsets some of the profit that you had on the first investment, so it kind of balances out your taxes. Now, then come January 1st, buying back that asset that you sold for a loss, because it's not like you wanted to sell it, you just wanted to save, you just wanted to lock in that loss to save money on taxes. So come new year, you buy back that asset, you still own it for relatively the same price because the price most likely isn't going to swing much from the time you sell it at the end of the year to the beginning of the new year. So that's the key concept behind it. Now we're going to get into some real life examples for cryptocurrency. But first, I want to talk about what classifies a capital gain in crypto because that's something that I needed to learn about this year personally because obviously, right, obviously when you're selling crypto or fiat, right, you made investment, you transferred it from crypto back into your bank, you sold it for fiat. That's obviously going to be classified as a capital gain. Now, number two, it's something you don't really think about, but it's you still would have to pay taxes on. Say you bought crypto, you made money on it, and then you use that crypto to buy a good or service. So say you used your profits to buy a Tesla this year. Congratulations. You would be paying money on the profit for that investment. So that's something you really need to be paying attention to. Number three, and this is the one that I was a little confused about because okay, so first, so if you were to swap crypto, so say you're swapping Ethereum at a profit for Bitcoin, right? You made money off ETH, you swapped it and put it into Bitcoin. That classifies as a capital gain, guys. Now this is something I didn't think was the case, but because I thought like with property, would be able to kind of like how real estate is, you could kind of carry over your property profits into a new investment. I didn't think I thought it was once you exchanged for fiat. Now, moving forward, I was like, all right, cool. This is some valuable information. I need to start to apply this in my own life. So moving forward, we have to understand cost basis methods. So when you sell crypto, there is certain ways in which the exchange will sell your crypto. Now, for me personally, this is just what I'm doing. I'm going to be using, this is what my Coinbase, this is what Coinbase is the exchange that I use. Automatically, the exchange has it set for the HIFO cost basis method. So this means that when you sell crypto, it's going to sell your crypto that you bought at the highest price first. So say you bought crypto. So let's go to the next slide here. I have a real life example. This is going to really put it all together for you guys and wrap it all up. So let's say you profited $100,000 from buying Ethereum and then swapping the profits into Bitcoin for a capital gain. If you held that asset for less than a year, you would still own short-term capital gains tax. Let's say you also bought additional Bitcoin at the top of the market at 69K per BTC. Unfortunately, the market dipped towards the end of the year, and your Bitcoin value is now down $50,000. Although you don't want to sell the Bitcoin because you believe in the asset long term, you don't want a huge tax bill from the profits that you had in Ethereum. Using the HIFO cost-basis method, you would sell your Bitcoin on December 31st, resulting in that $50,000 loss that is now locked in on paper. Come January 1st, you immediately buy back all the Bitcoin you sold for relatively the same price you sold it for. Instead of that original $100,000 tax bill you would have had from your Ethereum profits, you now only have to pay taxes on the $50,000 that you quote unquote lost from the BTC investment. In this situation, it's a win-win for the investor because you save money on the taxes, but you still own the asset moving forward, guys. So, in conclusion, understanding that these tax strategies are important for your wealth building journey, guys. You cannot neglect learning. And if you're watching this video, you're already ahead of the pace, guys. Learning about stuff like this is going to help you along the journey, and it's helping me along my journey because taxes is something that I never really learned much about. I've been learning about investing all throughout my life, but taxes is something that I'm now going to be putting more of my attention into because as my wealth increases, I need to understand how to keep my money. So, keeping more of your money will help you down the road. Once again, speak to an accountant to help guide you along your personal journey. And I know I'm going to continue to pump out videos for you guys, whether it's crypto, fitness, gaming, everything I'm passionate about. This channel is going to be to help you guys along your journey. So with that being said, this has been your boy, Coach Dusty. I'm out. Peace.